In the past 3 days, I made $2,800, and it came from one simple setup I've been using for many years. Now, this wasn't luck, and it wasn't from chasing trades. It was from following a repeatable process based on smart money concepts. Here's what I look for. First, liquidity buildups above highs or lows. Then the market sweeps it, trapping retail traders in the wrong direction. Once structure shifts, I enter with a tight stop loss and a clear target. That's exactly what played out this week. 3 trades, 2 winners, 1 break even, and that's how I stacked $2,800 in profit in just a few trading sessions. The best part? The setup isn't complicated. It only involves reading what the market is showing you and waiting for the right moment. In this video, I'll walk you through exactly how it played out and why this is one simple setup that continues to deliver. This strategy will change your life, and all you need to do is watch to the very end of this video. Now, it involves the ICT model, which is the market structure shift, the liquidity sweep, and the rejection of the low, and you can only take this using buys. It best works on USD CAD, so if you guys just go to USD CAD, as you can see here, the 5-minute to 3-minute time frame. We're going to use the 5-minute for our market structure shift, and we're going to use the 3-minute for the order block, as you can see right here. So boom, we're going to use the 5-minute for the market structure shift, the 3-minute for the order block. Most importantly, it's on UTC -4, which is actually London time zone. Perfect. So we have everything down packed. Now we're just going to jump straight into this. And if you guys want us to get you your first payout, you only pay us after you do get that payout. Click the first link in the description. We'll explain to you exactly how it works. But the strategy is super simple. So as you can see, what we're going to have a market structure shift. So first we want to identify the market structure shift. Now where can the market structure shift be? The market structure shift can be right here. Now where can our liquidity sweep be? As you can see, we took out these liquidity lows right here. Boom. So that's the beauty of this strategy. And what we also can identify is the rejection of the low. So what normally happens when we have a 3-minute order block resting right within these levels, what happens is that price can come back to these levels after it makes its run. So just like this, boom, it uses this level, and as you can see, it bounces off of the level, and that's where we'll actually enter and start collecting our profits. So we'll enter at the long position like this. We'll put our stop loss just below the low, and we want to ensure that's some minimum of 5 to 6 pips at most. And what we can do is we can target a 1-to-2 risk to reward ratio. Now, the beauty of targeting 1-to-2 risk to reward ratio is that we can actually target more. So let's say we have liquidity points. Let's pretend these are the liquidity points, okay? And let's say we wanted to target these liquidity points. So let's say price has then came back into our entry point like this, and now we're entered into the trade. So we're looking at 1-to-2R, right? But we want to target more. So if there's liquidity points like this resting towards the other side of the market, then we can definitely target more on our take profit. In that way, we can get to ratios such as 1-to-3R, 1-to-4, or even 1-to-5R. And yes, it is a possibility only if there's these liquidity points. So as you can see, once price does enter on our position just like this, boom. As always, we move our stop loss to break even at 1-to-1. So what this does is it makes it a risk-free trade for you. So if price was to come back like this, our stop loss is at break even. So if it comes all the way back, we wouldn't get taken out. Why? Because our stop loss is at break even. So it's just a safety measure, and if you guys want to follow that, I highly recommend it. If it doesn't come back to break even, then we'll take it to 1-to-2R, and we could take profits at that. Now, if you guys are comfortable with, scaling your profits to more and taking it to further distances and catching more pips, as you can see, we can then take it to the liquidity points, and we could end up taking a 1-to-3, 1-to-4, or even 1-to-5 trade, as you can see right here, just like this. Boom. So really simple. What we'll do, we'll get into a live chart example now. And again, if you guys want us to pass Manage Your Funded Challenge and get your payout guarantee, just click the first link in the description. We do all the hard work for you, so you don't have to do absolutely anything. But let's get straight into it. Boom. So as you can see, we're on a 5-minute time frame, and we let price do whatever it wants to. If it wants to go up, it can go up. If it wants to go down, it can definitely go down. So as you can see, boom, what we can identify here about price is that we had a liquidity sweep. And what we can also identify is that price sweeps back into this imbalance. So this even adds more confluence into our trade. So it sweeps back into this imbalance. So we don't want to go against that strong trend. We want to go with the trend. So let's try and look for some buys, okay? So you can see we had the liquidity sweep. You can see we had a market structure shift of this high. Boom. As you can see, we even formed equal highs at the top right here. So now that we have that, we even had the rejection of the low because the candle wasn't able to break below this low. So what we can do is go to the 3-minute time frame and we can look to enter off of a 3-minute order block. So as you can see right here, what do we have? 3-minute order block, which forms right here. Boom. So what we can do is we can enter off of that. We can just let price do its thing. Boom. As you can see, price does come back into our 3-minute order block. So what will usually happen, we would get put into this trade because of the spread rate. As you can see right here, we'll enter just like this. And what's the best thing we can do? We can put our stop loss just below the low, or a minimum of 6 to 5 pips. As you can see right here, and we'll target 1 to 2 risk to reward ratio, just like this. Boom. So are there any liquidity points? Yes, there is. So you can see we have more liquidity points over here. Our 1 to 2 ratio is already at a liquidity point, just resting right about here. So that's perfectly fine. And then we have this liquidity point at the peak, but we might not want to take it up to there because that could be areas of high distribution. So we don't want to risk going all the way to that liquidity point. But let's have a look and see how price does perform. As you can see, we do end up hitting take profit. Again, completely risk-free trade because our stop loss would have been at break even. Let's see how it does perform, and it does end up hitting the next TP level, which is about a 1 to 3R. And yeah, it does continue going further and further, which is absolutely amazing. So it actually does end up going to about a 1 to 8 or as you can see 1 to 9. So that's beautiful. And let's see if we had any liquidity points we could have targeted that high. Yeah, you can see right here. So this is the beauty of just checking what's happening on the previous market. You can see you have this gigantic imbalance that needs to be filled, and price could have definitely reached those levels just to fill in what that imbalance had, as you can see right here. But again, I hope you guys enjoyed this video. Don't forget to like, comment, subscribe, and I'll see you guys in the next one.